Which is the best stock to buy? Palantir Technologies or Rivian Automotive? I know you're saying, why are you comparing a data management company, data analysis company with an electric vehicle company? And I do these sometimes for the reason that some investors might have $100 to invest and they're asking, which one should I invest in, Rivian or Palantir? And so I know investors have that question, and so that's why I do these videos to answer those questions, those curiosities that investors might have. Now, I know it's not an apples to apples comparison because they are in such different industries, but I will do my best. I will use financial metrics to compare these two stocks on, four financial metrics, and I'll answer the question by the end of the video, which one is the best stock to buy. So you're not going to want to miss that. Let's get right into it. Revenue is the first metric I will look at over the trailing 12 months. And what we notice here is each of the companies are growing revenue nicely, with Palantir growing from a little over $1 billion to 1.9 billion in trailing 12-month revenue. Meanwhile, Rivian growing from, let's say, 600 million in revenue up to 1.65 billion in the most recent trailing 12 months. But look at the slope of that line there. Much higher, much greater than that of Palantir. Rivian is really ramping up production and experiencing explosive revenue growth. That I think will go on for several quarters more as it continues ramping up production. It's got enough capacity to really triple its production from where it's at right now. So it could just triple the amount of cars it can make because it has the facilities for it, if it can secure the materials, the semiconductors, and if it has the consumer demand to match that capacity, it could theoretically keep going with little more in need for investment of manufacturing capacity. So really exciting growth potential for each of these two companies, and they are one of the most innovative growth stocks in the industry today. The next thing I wanted to look at is their cash flow from operations over the trailing 12 months. And first, starting with Palantir, we noticed the company went from negative 300 million in cash flow from operations in the trailing 12 months ending January of 2021, and that has continued improving all the way to the point where it was positive 223 million in the most recent update. So really nice progress from Palantir, turning from cash flow negative to cash flow positive in a little over a couple of years now. Meanwhile, Rivian is going in the opposite direction. It went from cash flow from operations of a little less than 2 billion all the way down to negative 5 billion in cash flow from operations. Now, a lot of this was investments in ramping up production capacity, building out those manufacturing facilities, and moving forward as it ramps up the actual car production and makes sales, this metric should improve. It should improve now, unless it faces some hiccups and the cost of goods sold continues to increase and sales prices come if sales prices come down, competition heats up. There are many reasons and risks why it might continue moving downward. However, in all likelihood, from this point forward, Rivian's cash flow from operations should experience a somewhat of a turnaround and upward moving line from here on out, as it has made the majority of the investments that it will need to make over the next couple of years. Okay, so I'm going to keep an eye out for this. I follow Rivian closely on my channel here. I have several videos on it, and I'll continue watching this. But it looks like it's hitting an inflection point where it's bottomed out in terms of cash flow from operations, and it will start to improve. The next metric I wanted to look at is net income quarterly. And again, Palantir is showing nice progress here on this metric, turning positive net income for the first time in its history. 30.88 million GAAP net income profitable. In fact, management told us that they will be GAAP net profitable for the current fiscal year. So they might have a down quarter, but overall for the year, they're going to be GAAP net profitable. Finally. So nearly 2 decades in operation, and Palantir will finally be GAAP net profitable. Rivian, on the other hand, again, still going downward in this metric, 1.7 billion in losses in the most recent quarter. The losses are expected to continue, unfortunately, as it continues investing in new technology, new car models, working on reducing the expense per car and reaching economies in scale. That's going to take a little while longer. It really, I mentioned earlier, it has capacity for 150,000 cars and it's selling 50,000. So it has room to triple the production, right? And you can't be profitable if you have capacity of 150,000 and you're only producing 1/3 of that at 50,000, right? Because you've got all these overhead costs for a facility of 150,000, but you're only utilizing 1/3 of that facility. So until they start to reach closer to full utilization of that facility, profitability is going to be further down the future for Rivian, although it's headed in the right direction. It's headed in the right direction. So that's something that Rivian stock investors can look forward to, is that it's making progress, it's headed in the right direction, although it needs more time. It needs more time to get there. Finally, I wanted to look at valuation, and I chose to use the forward price to sales ratio to compare these two on, because Rivian is cash flow negative and losing money on the bottom line. So there was a lot of options that are removed because Rivian, I can't compare them with Palantir because they don't have positive cash flows or positive earnings. So I chose to use price to sales. And according to this metric, Palantir is significantly more expensive than Rivian at a forward price to sales of 6.4 compared to 1.365. Although in this case, I believe that Palantir has earned this premium valuation. So if I was picking between these two growth stocks to buy right now, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick Palantir. I would say Palantir is the better stock to buy here because it has proven that it can be profitable. It is expecting profits for the entire fiscal year. It's finally reached a scale where the company is profitable, while Rivian still has to prove that it can be profitable. It still has to prove that, and it still has to prove that it can start to move in the direction of profitability. So while the potential is there for Rivian, I still don't have enough proof to choose Rivian over Palantir in this case, because Palantir has proven itself. So for those reasons, I would pick Palantir in this case right now. As always, thank you so much for watching, and I've hand selected certain videos that I think you would enjoy that are popping up on your screen right now. So please click on one of those and I'll see you over there. Thank you for watching.